Okay, let's unpack this. The crypto market, especially altcoins, is absolutely buzzing right now.
It really is a lot of movement.
You've probably seen the headlines, Ethereum is on a serious winning streak. But is this just, another burst of hype, or is something more fundamental shifting beneath the surface?
That's the million-dollar question, isn't it?
Today, we're taking a deep dive into Ethereum's current price in July 2025, where experts see it heading, and crucially, how U.S. regulations are impacting its future. We'll also put it side by side with Bitcoin, XRP, and Solana to give you the full picture, helping you grasp what's truly driving this evolving market.
And what's fascinating here is that we're observing a really significant shift in capital flows. It's moving beyond just Bitcoin now.
Right.
The sources we've compiled paint a detailed picture of this market rotation and the drivers behind it, especially for Ethereum. This raises an important question. What exactly is making this current rally feel different from previous cycles? And, what are the implications for you, the informed learner, as this new landscape unfolds?
Okay, let's start with Ethereum then. The star of the show, right? The numbers are pretty hard to ignore.
Definitely hard to ignore.
As of July 21, 2025, ETH has surged to around $3,812. That's its highest level in over 7 months.
Yeah, quite a run.
Marking its 9th straight day of gains and a phenomenal 27% surge just this week alone, with over 50% growth since the start of July. So what exactly is fueling this impressive climb? Is it sustainable?
Well, if we connect this to the bigger picture, it doesn't look like just a retail-driven pump like we've often seen in the past.
Okay.
A major catalyst seems to be unprecedented institutional adoption. Those U.S.-listed spot Ether ETFs, which got the green light back in July 2024.
Yeah, I remember that. Huge news then.
Absolutely. They've seen record inflows. Just last week alone, they pulled in an astonishing $2.18 billion.
Wow, $2.18 billion.
In a week.
Yeah. Record ETF inflows are certainly significant. Huge numbers. But is this genuinely new institutional capital entering crypto, do we think? Or is it maybe just a reallocation of existing funds within their digital asset portfolios? What's the nuance there?
That's a really critical distinction. And while, sure, some might be reallocating, the sheer scale of these inflows, it strongly suggests a substantial amount of fresh capital is indeed coming into the space.
Okay.
And we're also seeing significant whale accumulation. There was one large investor reportedly buying like $50 million worth of ETH just over a recent weekend.
50 million, wow.
Yeah, and analyst Ali Martinez noted that whales have collectively bought over 500,000 ETH in just the last 2 weeks.
500,000 ETH.
This kind of quiet, large-scale accumulation often precedes major price action, but what's maybe even more revealing is a new trend emerging.
Oh.
Publicly traded companies like Bitmine Immersion Technologies and Sharplink Gaming, they're actually adding ETH to their balance sheets now.
Really? So it's not just MicroStrategy and Bitcoin anymore?
Exactly. It mirrors Bitcoin's 2020 corporate treasury trend, but interestingly, it seems to be happening even faster with Ethereum.
Faster. Why do you think that is?
It could suggest a quicker acceptance, maybe because the infrastructure is more mature now, or maybe Ethereum's utility proposition resonates differently. But this isn't just about financial opportunity, it signifies a strategic pivot. Corporations are acknowledging Ethereum as a legitimate, maybe even superior treasury asset in some ways. It suggests a maturity of the asset class where liquidity and network effect are valued almost like traditional financial instruments. This creates truly structural demand, not just transient hype.
Okay, structural demand.
Yep.
I like that framing. So what does all this mean for the technical side, the charts? Is Ethereum actually breaking through key resistance levels, or were we just sort of knocking on the door again?
Technically, yeah. Ethereum is nearing a really critical breakout zone. It's approaching that psychologically important $4,000 level.
Right, the big 4K.
Exactly. And that's an area that has rejected price advances 3 times before, back in 2021, 2022, and even early 2024. So it's a major hurdle.
Okay.
However, the current rally has broken above a long-term trend line dating back from the 2021 highs. And crucially, there's strong volume supporting the move.
Volume is key, always.
Always. And on a larger scale, looking at the monthly chart, Ethereum is forming what some analysts are calling a massive ascending triangle.
An ascending triangle.
Bullish pattern, right?
Typically, yes. It's a pattern that suggests a potential move towards, say, $6,000, $8,000 could be next if it successfully breaks and holds above that $4,000 ceiling.
6 to 8,000? That's quite a jump.
It is. And it's also trading, a healthy 18% above its 200-week exponential moving average, which is a level from which ETH has historically launched pretty strong rallies.
That technical outlook sounds very strong then. Very positive. Yet I saw some commentary calling this the most hated rally right now. Why the discrepancy? Why the hate? And what are the counterarguments to this seemingly bullish technical picture? It's an interesting paradox, isn't it? Despite the skepticism and actually quite high short positioning.
Oh, people are betting against?
Yeah, significantly. There's nearly $331 million in ETH short positions that risk liquidation if the price hits $4,000.
Oof, that's a lot of pressure.
It is. But analysts like Mark Newton from Fundstrat, they insist the technicals strongly support the move upwards. The key, they argue, is the real volume behind it. It indicates genuine buying interest, not just speculative froth or short covering.
Gotcha.
And the fact that we're seeing this institutional accumulation before widespread retail FOMO, fear of missing out, that's also a significant sign. It suggests a more mature rally compared to previous cycles, which were often, let's say, more emotionally driven.
Right, less hype, more substance, perhaps. Okay, now shifting gears a bit to a truly pivotal area for all of crypto, U.S. regulations. This has been such a source of both frustration and, lately, maybe some opportunity.
Definitely, a huge factor.
We've seen significant movement, particularly with Ripple and XRP. How has the resolution of that long-running Ripple SEC lawsuit impacted things? Not just for XRP, but maybe for the broader market and Ethereum's future, too.
Yeah, this brings up that key question about legal clarity, or the lack thereof historically. The Ripple versus SEC battle, 4 years long.
Felt longer.
It did. It officially concluded in 2025, with Ripple agreeing to a $125 million fine. Now, that's a significant milestone.
Why so significant? Beyond just Ripple, I mean.
Because it removes major regulatory uncertainty for XRP, obviously. But, crucially, it sets a kind of precedent, or at least offers a data point, for how other digital assets might be treated or regulated down the line.
Oh, okay. A potential roadmap.
Exactly. It allows companies potentially to operate with a bit more confidence and certainty. And that positively impacts the whole crypto market by reducing this major overhang that had really stifled innovation and investment for years.
And beyond XRP, were there other big legislative moves from the U.S. government recently that are shaping the crypto landscape?
Yes, definitely. On July 18th, the U.S. House passed 2 major bills. First, the Genius Act, which focuses on stablecoin regulation.
Stablecoins, always a hot topic.
Always. And second, the Clarity Act, which is aimed at defining the roles finally of the SEC and the CFTC over digital assets. Who regulates what?
That clarity would be huge.
It would. And these acts, interestingly, have backing from figures like former President Trump, who's been quite vocal, vowing to make America the crypto capital of the planet.
Right, that's a big shift in tone.
It is. The aim is to provide that much-needed certainty, which, in theory, opens the door for increased institutional investment and wider adoption across the board. And that undoubtedly includes benefits for Ethereum.
So how does this regulatory shift, or potential shift, specifically tie into Ethereum's journey then? We know the ETFs were approved, that was massive. But what about other aspects, like staking? Is the regulatory clarity fully in place there?
That's where the picture gets a little murkier still. While the U.S. greenlighting the spot Ether ETFs was a huge positive step, the legal status of staking in the U.S. still remains pretty undefined, even after the ETF nod.
So you can buy the ETF, but the underlying mechanism of staking is still uncertain legally.
Pretty much. It's an area of ongoing uncertainty that could still influence Ethereum's regulatory path in the future. And it could particularly depend on, say, the outcome of the November election. Different administrations might have different views.
Right. And what about outside the U.S., Europe, for example?
Well, Europe already has its comprehensive MiCA framework markets in crypto assets in place. That requires exchanges to get a CASP license, a crypto asset service provider's license.
Okay.
So that brings clear regulatory guidelines over there, but naturally it also means higher compliance costs for businesses operating in the EU. Swings and roundabouts.
Definitely. Okay, it's clear Ethereum is making major waves. But how does it really stack up against the competition right now? Bitcoin, XRP, Solana, they're all key players too. Let's start with the OG, Bitcoin.
Right. Well, we've seen Bitcoin's market dominance drop quite sharply recently. It hit a 4-month low of around 60.9%, down from 64.5% just 5 days prior.
A noticeable dip. What does that signal?
It generally signals a healthy capital rotation away from Bitcoin and into altcoins, with Ethereum, as we've seen, leading that charge.
So not necessarily people selling Bitcoin, but maybe taking profits and moving into ETH and others.
Exactly. Bitcoin's price has actually remained relatively stable, hovering around $118,000, $119,000. So this shift really indicates a healthy market rotation rather than a broad sell-off.
Okay.
And what's fascinating, as I mentioned briefly, is that Ethereum is kind of behaving more like Bitcoin did in previous bull cycles. It's capturing a disproportionate share of the market flows.
Interesting.
It suggests it's truly maturing into a digital asset class of its own, increasingly seen as a direct competitor for that institutional capital, not just a smaller altcoin.
Okay, so a rotation from digital gold to maybe digital oil, as some people call Ethereum. Now, what about Solana? Often dubbed an Ethereum killer because of its speed and low fees. How does that comparison really hold up today?
Yeah, the Solana versus Ethereum comparison, it often boils down to transaction costs and speed, right?
That's the main narrative, yeah.
Solana boasts incredibly cheap fees. We're talking average 0.00025 per transaction. And it can process, theoretically, up to 65,000 transactions per second on its layer 1.
Wow, that is fast and cheap.
It is. And that's definitely made it highly attractive for certain applications, especially things like high-frequency trading or, microtransactions. We've seen users highlight how they pay pennies on Solana for stuff that would cost dollars on Ethereum's mainnet. Plus, Solana has pushed unique innovations like the Saga mobile phone for Web3 integration, and it's seen significant growth in its own NFT and meme coin ecosystems. It's established itself as a key player, no doubt.
But Ethereum has its layer 2 solutions now, right? Things like Arbitrum, Base, Optimism. Doesn't that address the fee and speed issues? Doesn't that kind of level the playing field?
That's a crucial point, and yes, largely it does. Ethereum's Layer 2 rollups now handle a significant volume of transactions, a majority, in fact, at much lower costs, sometimes just pennies per transaction on these L2s. The Denkin hard fork back in March 2024, for instance, cut the L2 data costs by up to 90%. Big improvement.
Right.
However, Solana's direct Layer 1 efficiency is still a point of contention for some. They argue its simplicity and consistently low fees, without needing to bridge to an L2, provide a superior user experience sometimes.
I see. Simplicity versus maybe more complexity with L2s.
Potentially, yeah. And it has occasionally allowed Solana to overtake Ethereum in things like daily transactions or DX volumes, especially during periods of intense activity like meme coin mania. Now, some critics also claim Solana achieves this partly because it's more centralized than Ethereum, which enables its lower fees. That's a different architectural choice, comes with its own trade-offs regarding security and decentralization.
Trade-offs everywhere in crypto.
Always. And Ethereum's scalability story is still evolving. Plus, if Solana's Big Fire Dancer upgrade, which targets something like 100,000 transactions per second, actually lands successfully in the second half of 2025, well, that could really challenge Ethereum's sort of default smart contract platform crown.
Okay, so the competition is definitely still fierce there. And finally, let's touch on XRP again. With its newfound, or at least improved, regulatory clarity, how's it performing against these giants? What's its unique value proposition in this landscape?
XRP has seen a pretty strong rebound in July, trading up above $3.50. Technically, it's showing strength too, with analysts pointing to a W pattern breakout.
A W pattern. Another bullish signal.
Often considered one, yes. And perhaps more provocatively, there's been talk of an MVRV golden cross signal.
Okay, break that down. MVRV.
Right. MVRV is market value to realized value. It compares the current price to the average price at which each coin last moved. When market value crosses above realized value, it can signal the start of a bull market phase, historically.
Got it.
And based on this signal, some analysts are predicting a potential surge for XRP of up to, get this, 630%.
Wow, 630%.
Which, theoretically, if historical patterns repeat perfectly big, if you could push XRP towards $22 in 2025.
$22.
Oh, wait.
That would be astronomical.
Highly speculative, of course, based on past patterns, but its primary use case, remember, is in cross-border payments. That continues to underpin its utility. And the recent regulatory clarity from the SEC lawsuit conclusion, that definitely strengthens its position for potential institutional adoption, especially for financial institutions looking for efficient ways to move money globally.
Okay, makes sense. So bringing it all back to Ethereum, with all these factors swirling around, institutional flows, tech upgrades, regulations, competition, where do the expert analysts actually see its price going by the end of 2025 and maybe beyond? What's the general consensus and what are the main drivers behind those predictions?
Well, most expert analysts seem cautiously constructive on Ethereum's price right now. While there's definitely a wide range of predictions out there.
Always is in crypto.
Always. The sort of consensus from the sell-side houses seems to cluster around $4,000 to $4,500 for the July-August 2025 timeframe, with short-term targets hitting that $4,000 mark pretty much by the end of this month, July.
Okay, 4-day to $4.05K near term. What about medium term, like end of year?
For the medium term, looking out towards Q4 2025, more moderate forecast project, maybe $6,000 to $8,000.
Back to that ascending triangle target.
Exactly. But then you have the more bullish predictions. Analysts like Tom Lee of Fundstrat or Colin Talks Crypto, they're suggesting ETH could reach anywhere from $10,000 to $15,000 or even $20,000 by the end of 2025.
10, 15, 20,000. Those are some eye-popping numbers. What needs to happen for those higher predictions to even possibly materialize?
Well, several key catalysts would need to fall into place. Firstly, the successful rollout of the next major network upgrade, which is called Pectra. That aims to improve finality and validator capabilities, making the network even more robust and efficient.
Okay, Pectra upgrade.
Continued strong ETF inflows are crucial. If that $2 billion a week pace continues or even stays strong,
That's huge demand.
huge, as well as the accelerating trend of tokenizing real-world assets. Ethereum already hosts over 60% of tokenized RWAs. If that continues to grow, that could unleash substantial incremental demand. Some estimates suggest maybe $150 billion just from OECD pension funds alone, potentially.
Wow, tokenization is a big narrative.
It really is. And finally, the fact that nearly 30% of all ETH supply is locked up in staking, that significantly reduces the liquid supply available on exchanges. So any increase in demand gets amplified in terms of price movement.
Right, supply squeeze effect. That's a powerful combination of potential factors. But on the flip side, what are the main risks? What should you be aware of when considering Ethereum's trajectory? What could derail this?
The biggest near-term risk, as we discussed, remains that potential price rejection at the $4,000 level. It's proven to be tough resistance before. A failure there could lead to a significant pullback.
Makes sense. What else?
Beyond that, you always have broader market volatility. Macroeconomic conditions like if U.S. 10-year Treasury yields spike unexpectedly, or there are surprise tariff shocks that could compress risk asset multiples across the board, hurting crypto along with stocks.
Factors outside of crypto itself.
Absolutely. Then there are security concerns, especially around things like cross-chain bridges, which connect different blockchains, and also the complex implications of restaking protocols like EigenLayer. These remain a kind of soft underbelly for Web3. We saw that painfully with the recent $1.5 billion Bybit bridge hack.
Yeah, those hacks are always damaging to confidence.
They are. And finally, increasing competition. We talked about Solana. If it does sustain superior throughput, or if Ethereum's user experience continues to feel complex for some people due to what's sometimes called L2 fragmentation.
Fragmentation, meaning too many L2s to choose from.
Yeah, potentially making it confusing for users to navigate which L2 should I use? How do I move funds? If that perception persists, it could erode Ethereum's powerful network effect moat over time.
Got it. Lots to watch out for. So there you have it. Ethereum in July 2025 is riding this wave of institutional adoption and technical strength, looking quite bullish, with ambitious price targets from many experts. Meanwhile, the crypto regulatory landscape seems to be gaining some clarity, which is significantly impacting assets like XRP, while competition from platforms like Solana keeps the pressure on everyone to innovate and improve efficiency.
Right. And whether Ethereum finishes 2025 closer to, say, $2,500 on the low end, or maybe $6,000, maybe even higher, it's really going to hinge on the successful execution of its upgrades, like Pectra.
Execution is key.
Absolutely. And continued demand through these new financial rails like the ETFs and just a generally favorable macroeconomic environment. But for you, the learner, the listener, the takeaway I think is clear. The crypto market is evolving rapidly.
How so?
It's moving from a purely speculative realm, or mostly speculative, to one that's increasingly influenced by fundamental utility, by real-world use cases like tokenization, and by traditional financial structures integrating with it.
Yeah, it feels more grown up in a way.
Exactly. And navigating this journey requires vigilance, it requires critical thinking, and keeping a keen eye on key metrics like staking ratios, layer 2 activity levels, and those global regulatory shifts we talked about.
That perspective truly reframes the market's current state. So, thinking about all this, what stands out to you most about this deep dive? Are you personally watching that $4,000 resistance level for Ethereum most closely, or maybe the broader impact of U.S. crypto laws as they develop?
It's all interconnected, isn't it? But the institutional flow via ETFs is hard to ignore right now.
Yeah. And here's something to consider as we wrap up. As real world assets increasingly move onto blockchain rails, that tokenization trend, what new industries or financial products do you think will be the next to be tokenized? Could it be real estate, art, carbon credits? And how might that shape the crypto landscape even further in the coming years? Something to mull over.